Welcome everyone to the Kindle Report. Well, what a day we had. A crazy day, relentless selling again, just breaking through all of the numbers. And there was a few comments on people like to read my thumbnails I put out every night, and they're just marketing. They're just something to have a subject to have the video on. And last night I said, markets to rally, and I still think we're very close to a bottom here. I'll discuss a couple things that I believe happened. If you recall last night, I said we needed to hold Monday's low at that 13 level. We took that out, and now we just had a really ugly opening just now. And you'll see here in a few minutes, we're looking at S1, S2 for today's low, and I think that could be the print, but it also, I'll go through all these details in the technicals here in a few minutes. But if you recall, the 4100 was the first fib target one on the downside. So we'll go through that. What I was looking for was a rally potentially into Friday that would reject off of the 10-period moving average. We didn't even get close to that. So anyway, let's talk a little bit about what really happened today. And I think you're going to be hard stretched to come up with a number of things, but it was pretty much blamed on Google. And I've been talking, I mentioned this in last night's video, that amongst friends, we'll just say, I've been saying Microsoft is going to take out Google and the rest of them. And they certainly showed that today. I mentioned last night when the earnings came out that it was a mirror image of each other. Microsoft positive, Google just terrible. And I think Google has missed it on the AI situation. I've tried using Bard. It's okay. ChatGPT is, I think, much better. I've not seen much of an attraction to going over to Bard and doing anything there. But I think beyond all that, they've just lost the edge that they once had. And the markets equated all of this to some very bad information from an earnings standpoint, and it was all set. Folks have been talking. If you just watch, I don't watch CNBC, but I have Bloomberg on intermittently during the day. When certain people come up, I'll just see what they're saying and tune them out right away just to see what kind of consensus is out on the street. And the overall feeling right now is pretty bad, and probably the biggest issue that we have coming at us is once again in the treasuries, and there's going to be a ton of supply coming here really soon, and that's not going to help any kind of drop in interest rates. And I mentioned last night, and we'll go through all the details here in just a few minutes, but I mentioned last night that we were probably dropped down to about the 10-period moving average, and we did that and then rebounded today. So there was a lot of cross currents going on in the markets today. And there was one decent, I believe it was an S3 bounce off of the numbers today. And it was a decent 25 handle bounce, roughly around the 20 handle all the way up to 48, 49. And then it was straight down again into a new low, printing all the way down, I believe 05-ish was the low. And now on the reopen tonight, we're printing down in the 41 handle when I looked just a minute ago. And so let's talk a little bit. Really, yesterday on the only real economic stuff that came out was new home sales, and they were actually at 759, up about almost 100,000. They were expected to be 670. So it was a pretty good number. So I'm kind of shocked at that. We go to Thursday, I'll get all the economic information out here. Tomorrow we got claims expected 207. We got continuing claims. Last week were 1.734. Maybe these numbers tick up just a little bit, but they've been incredibly stable. So if there is any kind of influence on the market tomorrow, maybe it will be if that number were to uptick quite a bit on both the weekly claims as well as the continuing claims, then maybe that would be just another negative and push us further down towards some of these Fibonacci targets underneath. Also, we have durable goods expected to come in 1.1. GDP revision is coming out 3.8 to 4% is the number there. The deflator is looking at the 2.5%. And then we also have pending home sales expected to be down just a little bit. But when you were looking at today, there was a little bit of a rally when they finally got a Speaker of the House. There was a bit of a 10, 12 handle rally off of that. And then it just faded into the close again. Nobody wants to own this thing. And I mentioned last night that I didn't see any rallies, really more of a sideways movement. I thought we could trade up into Friday. Obviously, forget that. That didn't happen. However, and more details here in a minute, we did get an RTX buy signal on the futures. And even though we opened lower, that could be an interesting opportunity there but the overall metrics and everything that's out there looks pretty bad, except for I was looking for a turn up on the PPMs, and I'll show you that in a minute. And we are looking like we did get a turn up today. We got the RTX buy, so maybe there's some recovery. We'll go through more details. As far as everything else goes, we had the S&P down 1.43, NASDAQ down 2.43. Kind of prompted me to kind of look at some triple. The TQs might be a little bit of an interest for a bounce. I did put some of that on. But the Russell down 1.67, not as bad as the NASDAQ, but the S&P is definitely pretty much in line with what the Russell did. 9 and 11 sectors were negative. We had consumer services down 5.9, and that was led by Google. Google's in that group. Definitely saw a lot of things that are, I guess, changing some of the direction. We're still seeing a bid in Bitcoin overnight, so 34.6 the last time I looked there. So I think plenty to talk about. I don't think it's going to take a real long time to get through tonight's stream. And I'll try to break this stuff down once I get on the charts, and so we can take a look. Well, first we'll take a look back at the database real quick on WaveTech, and then we'll get right into the technicals. All right, so here we go on the database. 15.55, 324 cells, 160 buy signals. This pretty much blown out. 85% or 8.5 stocks out of 10 have no position. So we're in extremely negative mode. I expect as we come into Friday, we stay down in the mid to lower 42 handle. We'll probably see more attrition on the intermediate. We dropped under 42% there. And so not a lot of prospects for anything good to come here. And I think that if there's really nothing to look here, folks, and I know a lot of folks are probably people that when they grew up, they just looked at the pictures in the book. They didn't read the words. But last night I laid this out pretty clear that I thought maybe we could get up to that 10-period moving average up towards some of the numbers on a weekly chart, which I'll bring up in a minute. But there's nothing to hold this market up here. There's nothing. And doesn't appear, based on what's coming out, claims, GDPs, and up just an update on that. There's really nothing that's coming out of this market right now that can be good. We got wars going on. Maybe if there's actual ceasefire in Gaza, maybe that has something that will stimulate maybe some buying, but there's absolutely nothing out there. So markets are definitely still in a very negative rotation, and there's, like I said, we got to get over 22% on this short-term database just to even start some sort of configuration that would lead to a bottom. So the question is the bottom in place yet? No, but I would look for, I think we're getting pretty overdone here on the downside, and I'll cover some of these technical numbers. So let's go ahead and get into the S&P right now. All right, this is the hourly chart, and you see we got a gap on the hourly, this opening, and we're trading right now at the 93.75 level, low 90.75. I'll show you on the market grid here in just a minute, but you can see on the hourly, it's suggesting that we're going to try to rally and recover at some stage, probably in the next hour or so. We should see a print start to turn around here, maybe come at least into the 10-hour moving average. That's right now 44.20. You'll see when we go through the market grid on the daily, it's pretty limited to maybe around 42.40 on the upside, and there's pretty interesting numbers on the downside somewhere, and I'll show you here in a second. Somewhere we've already printed through 41.95, so possibility around 41.78 is a point where maybe we get a bounce overnight, something like that. By the way, I just saw, David, that's super funny. All right, let's go to the daily. So the market grid had turned up, and then, as you can see here, the yesterday's range, it was kind of interesting, folks, because we got up just R1 was 42.85. We actually printed 41.73. We had so it was almost to R1. S2 is where, actually it was S3 where we got a bounce intraday around that 26 handle. I think it was 24 low. We bounced all the way back to 50, and then we printed down through the STX level 42.12. We went out at 42.0975, which technically gives us a buy signal on the from an RTX or STX viewpoint, which typically just means a day or two sideways. And we have the one thing that did happen, which was my expectation, is we have a slight uptick on the PPM1 here, which typically can at least set a tone for us to trade back into this level. I was looking at something interesting, and we got right over here on October 3rd. I don't know if I don't have a way to, let me see if I can zoom in on this, okay? I'm going to draw this in because I did notice this pattern, whether we get a repeat of this pattern or not, but there's several things that look very, very similar to this. And I remember talking about this back when it occurred. So let me just draw in something here real quick. So here's the point where I'm talking about is right here. We got STX buy signal. Next day we got the reversal. And what happened is all the PPMs turned up. I remember talking about that we're probably going to get a rally off this low. It went way more extended than what we saw. And what I was hoping for, and when we were going through the charts yesterday, is that we had some kind of completion here, and then we'd see maybe some kind of pattern, something like this. The fact that we got a new low here is really, what that's telling us is maybe this pattern here has extended, and we also taking out the lows of Monday, which was right here, which was the 13.25 level, so 42.13.25, And that also was corresponding, I'll show you in a minute, with the weekly chart. But we took that out. With this RTX signal, it's not as robust looking as this one was here, but it does look like we got a shot at maybe some stabilization, and we probably could get the market grid to turn up depending on how we close today. And we're sitting right here at lower lows. So let's go through the market grid here so you can see exactly what that looks like. So market grid is right now, if we look for the range for tonight's session and tomorrow, S1 41.95. We've got a low of 41.90. We've already taken that out. 41.78 is S2. And then if you look at the worst case, 41.60 is S3, 41.47. And I think a lot of this, and when we go through some of the technicals on the treasuries, are probably being driven, some of that sentiment that we saw today could be carried over to tomorrow, because like I said, we do have GDP, we have claims, we have a few economic indicators, macro stuff coming out, but I don't think none of these are going to be material unless, and I'll just put a but on here, but if we see an increase, a big increase in weekly claims, maybe that convince people, who knows, is bad news good news, or is bad news right now? I think it's kind of tough to call. The algos are suggesting that they're going up. I saw somebody on Twitter going, oh, Bob's algos got fooled. Actually, they were still negative. We were supposed to, today was supposed to be the final day down. I thought we would hold some of those support levels that we talked about last night around S2. Obviously, that was not the case, so we have an extension, but they are turning up, and it does look, we also crossed this second derivative here on PPM2, but we're still down minus 0.43, so we're in trend mode down in here, and we were in trend mode down yesterday. I believe the indicator yesterday was still right around, was minus 0.45. So, like I said, the pattern that was set up, we got 5 down. We typically will get 3 up, which that would have been the case if we could have closed up today. And then we're looking for 3 to 5 down. Now that this pattern has extended and you have this one green bar in here, it's probably, this is going to be a potential to be an 8-bar pattern, which would suggest we have 2 more days before we finally complete anything that would possibly be a reversal. So I would suspect that we trade in a fairly narrow range in the range of S2R1, which would be 42.24 would be the targeted high, 41.78 would be the low. It's possible that we're printing the lows right now as we speak, but it still looks like there's enough pressure, especially even on the hourly charts, maybe to revert back. What we're looking at the algos on the hourly are suggesting that we're going to rebound into London. So, but there's going to be plenty of overhead resistance on this thing all the way up. If we print back above 42 handle all the way up, you're going to look at some pretty serious stuff. So use the market grid on the hourly to kind of target where the resistance points are going to be, probably R1, R2 on the hourly. But from a daily standpoint, it looks like we've got a shot at least trying to close higher, maybe get a day up, but there's still at least 2 more days after today's action. It extends this pattern to probably an 8, and then we get 8 down. So we had 8 down, we probably get 3 to 5 up, and then we could have a whole nother sequence on the downside, which could carry us down to some of the Fibonacci targets out there. So let's go over and to the weekly for a minute. And here's where the 41.72, I mentioned this last night, is fib target fib target 2 on the weekly. 4105 is fib target 3. And we're seeing the potential of this thing trying to hold if we print down. And that 78 was the market grid number. We got another number here at 71. So watch how the market acts there, see if we can get a bounce. If not, we're probably printing down to 4105 in this pattern. You can see the weekly market grid is down quite a bit. And the only thing that could have helped this thing to rebound, and it still may be a factor, is that PPM3 is up at 0.12. So that would suggest that maybe we could crawl back towards 4240, 4270, but that looks fairly far-fetched with the daily and the hourly configuration at this time. So we'll stick with the weekly here. The weekly NASDAQ is coming right down to that rising 40 period moving average on the weekly, which is going to be, we'll go to the daily here. We'll start with it. We'll go top down from weekly down to daily, but we're really looking at fib target 1 was 14,266. We're trading 14,379 last. The low was 14,353 so far this week. So we're coming right down to that 40. But we definitely have that range that I was talking about last night. I'm going to blow it up. This little wedge that forms rising 40. You got a declining 21. We usually trade within this range here. So we're going to be locked in this sideways range, possibly bouncing off of this key value down here at the 14,129. I went through quite a bit of analysis last night when I was talking around this 14,2 to 14,150 to 130 level. That should be where we start to see some support show up. And really all you can hope for is you got PPM1 down in trend mode, which tells you that value 15,038, it's coming down every week by about 20 handles per week. That's going to be your upper end of the range. So you get sandwiched between, we'll just round off, say 14.1 to 15, right around 15, even 14.9 level. So that's going to be a range bound that you're going to likely to stay in. It doesn't look like this is the place where we break through this, but if we do, there's 2 Fibonacci targets below here that could definitely get triggered. So we're trading right on 14,266 is fib target 1. Fib target 2 is 13,711 and 13,667. And like I said, my overall expectation from the database, short-term database, is completely blown out. You got 85% of all the stocks have no position, declining or neutral. And then on the intermediate, we're around 33%, 36, and we should see that continue to decline as we come in this week. So the markets are starting to deteriorate, and there's not much to hang on to here from looking at what's next as far as any uptrend goes. It's interesting. I did see somebody, not as bad as Kramer, but claiming that we're going to be at all-time new highs by year end. That's going to be a tough order. Looks to me the luckiest thing we could get into is that we hold some of these upward patterns here, that some of these longer-term moving averages, and we were able to rebound. I believe not this Sunday, but the following Sunday, I'll go through and do the long-term outlook on the Sunday after next. So we'll cover that then. Let's go to the daily here. So here's excuse me, similar gap down. NASDAQ has not turned up. Theoretically, this even today or tomorrow should be the bottom end of this pattern, and that's going to be kind of sketchy here, folks. We could run this pattern all the way from a week from now right into November 1st when we come into the 1st. And that's funny. I see somebody, Tom Lee always says there's a new high coming. I've never seen him not say. I guess he was somewhat negative, but he's kind of a perma bull for sure. Off to the zombie index, to the Russell, just continues to fall down. We definitely got an STX buy here as well, but this index is trying to turn up a little more, but it's really in a lot of trouble. We did see it basically outperform the NASDAQ. It was only down 167 while the NASDAQ was down 2.43. So, yeah, that's not a lot to be proud of for sure. But we're definitely, these patterns that are setting up here are definitely getting to the point of where there's a potential for a bottom across the board on these indexes. But like I said, probably another day or two. And depending on what we come out with, we could print some of these extreme levels. And I've warned you folks before, whenever I mention these numbers, they tend to get hit. So, today, trading-wise was very, very good to me. And there were some really nice swings throughout the session, especially those of you who've got the webs. That is something that was really helped to identify some of these turns today. All right, let's go ahead and go into the treasuries. All right, so here's the treasuries right back up to the RTX level. RTX was 4.94. We closed at 4.959. So we got an RTX sell. I was talking about in last night's video that we should continue to ride along this slope, and that would be the low. So the 10-period moving average 483.7, the low 485.10, and it's going up right now about 4 basis points per day. So that's going to put us up here at around 487, and we should just continue along this line. And this has not been, the market grid is not updated here right now because we need a first tick for the calculation to come in for the next market grid. I suspect that it's turning up, and there's a possibility of getting up here and testing 5%. And I think there's still a better and even chance that we see somewhere between 5.15 and let's say 5.25. And this new supply that's coming to the market is just going to continue to weigh on the market. And like I said before, the bond vigilantes out there, maybe the Japanese, they're probably selling some bonds here. And then you also have the Treasury selling bonds by offering new bonds. And then you've got the Fed doing QT right now. Like I said, the one bullish thing I think that could happen for bonds, and I'm not sure they're going to do anything before the meeting. I'm sure they won't. But the one thing that we want to watch for as we start to come into the Fed meeting is some kind of moderation or something, any discussion of QT ending or anything that would say they're moderating it would probably end up to be somewhat bullish for the bonds. But at the moment, and I've talked to you a fair amount about this, it looks like this slope that's being projected here is going to last into probably mid to late November, maybe even into December. So there's plenty of supply coming, and I don't see, even if the Fed said they were backing off the pedal, that would matter all that much. But there could be an emotional moment there if something like that were to happen. Let's go to the weekly. And the weekly, we did get an RTX sell signal, so we should see something come in where after this week, maybe the market grid turns down on the top. Maybe it still is sloped up slightly on the bottom end, but we should see this start to funnel us into a sideways mode here, right around this 5% level. Like I said, we probably see spikes 5.15, could even see 5.25, but they're gonna keep coming back in and start to stabilize around this 5% level. And I think this number's been out there, but I've talked about it before. But where we are right now in yields is exactly where we should be. In fact, I think the average yields for the last 35 or 40 years is 5.5%. So the whole idea that when we were down at 1%, that was anything but a manipulated rate here. I'm just trying to see if I could, there we go. Just wanted to fix this indicator on the bottom. But this slope here is just going to continue. And, if we get into November, we're still looking at roughly, 470, 475 is the bottom end of this thing. But I think ultimately we just continue to climb up. I will probably next week, as we get into November 1st, I'll do a yield curve analysis at that point in time. All right, I said I would cover it tonight. Let's go through the dollar. We'll stick here with the weekly. And you see weekly bounced off that 10-period moving average. We are starting to see momentum die down. And I think we've got the market grid down. We're probably maybe a week or two from seeing the dollar starting to flatten out, maybe maintain around the 105.5, 106 range. We should see that come in. But you can see we've already crossed to the first derivative on PPM1, but we're at positive 0.29, which is trend mode up. So you're going to continue to see bounces out of here, and this is the weekly charts. Let's go into a short term on a daily here. Daily, we got the big reversal on Tuesday, and now we get some follow through. But I think the upside is going to be limited to about 107, 108 is going to be a top end. I'm going to go back to the weekly here just so you can see that market grid number here. Yeah, R3 107.14. So we're getting fairly close. Actually, 107.01 and 107.27. Somewhere around there, we could print up as high as close to 108, but this should start to top out. Once again, this is a weekly. There's still a nice curve being projected, even though we're starting to see some dissipation of the upward move. Yeah, so David, you're asking when I'm going to be out of town. I'm going to be out of town the entire week of starting on November 13th. I'll be gone that whole week. So that should be your low. I get it. I've told you when I go out of town, the markets tend to do crazy things. But anyway, that this configuration looks like there's still relative strength here to keep this market between 105 and 108. We're just going to round it off there. But on general, even though the PPMs are starting to break down, there's still substantial uptrends there on that PPM 1. All right, we'll do crude oil, stick with the weekly. You know, it's interesting because it may be just that crude oil is actually holding up in this pattern right now just because of, we'll call it the war premium that's in crude right now. And even then, it's not able to do very well. If we look back, and I remember talking about this right when the Israeli situation began, is that the configuration didn't suggest that there was some kind of big spike in oil and disruption coming. So it still doesn't. And if we look at if the algos are anywhere close to being right as we come in the next year, crude oil is going to be under pressure. So we're possibly just seeing this demand destruction starting to happen even more as we come into year end. And I think it's already there because you saw, I think, a build in stocks today that was released, and I think a lot of folks were looking at a draw on him, and they're just continuing to build here. And I wouldn't be surprised if I would say I wouldn't be surprised at all if we start to see some further rotation as we start to come in toward probably mid-November. And maybe that'll be after the Fed meeting that's coming in. I believe that meeting's around the 1st. So we've got, that is a good call. That's next week, I believe. So like I said, I'll start to focus in on some of the Fed stuff probably on Sunday night. But crude looks to me like there's still a decent uptrend here on PPM. 2 is at a plus 0.79, so that number should hold pretty much where the low was here. 81.13 is the 21. We printed down to 82.09, so we're just about a buck over that number, but we should see bounces. I talked about this last night, probably 81, the extreme 78, and on the upside we're looking at 88, 90 tops. So that's this really just setting up a trading range here. All right, so we'll go to gold next. This is weekly gold, continuing just to trade up. Like I said, looks like we're going to just do a consolidation pattern above, we'll call it 1940 to around the 2015 level. That should be our top end. We should just see a consolidation for multiple weeks here. I don't see us skyrocketing out here. Everything looks like it wants to soften up, at least as we come into November. The configuration looks fairly negative, but really just more consolidation. All right, so off the Bitcoin weekly chart, we're now hitting fib target 2 on the weekly. That target was 34,680. We printed up to 35, almost 200 here. And like I said, that those numbers seem pretty out of line when we were talking about this. This came out here. I did look. I'm going to go over to TradeStation for just a second here. Let me bring Bitcoin up, and I'll show you here. You'll be able to see it on the screen on this drop down. But there was a buy signal on 1017. I suspect if you have WaveTech, if you put the grayscale in there index, that you probably have a buy there as well. But it actually issued a buy 28,286. And we go back to TradingView here, and you can see these Fibonacci targets came out around that same time when that happened, right at early October. So all of a sudden we get confirmation here, and off we go. So there's one more target here, which is 36,340. So we're not too far from that. I thought maybe we'd back off. We're going to go over to the daily here, and you'll see we got this RTX sell signal, but we're still got an upward bias here. And I was talking about that today was possible of starting this correction. It looks like, just like with the S&P, got extended for one more day for the possible bottom. The same thing here. Looks like somewhere we should start to see maybe a minor top come in here, and then start to move back toward these moving averages. And it may take multiple days. One of the patterns that we've been seeing in Bitcoin is it makes a move and then it just consolidates. It stays in a very tight range. And I don't know if that'll be the case here, but that's certainly what it looks like. And we never look at this chart. I just want to see if I can get anything off of it. This is the hourly chart, so not really. I was hoping that maybe it'll give us some insight here. So I'm going to try to do something. I know this is let's try a 4-hour chart. There we go. We got a dragon head. Yeah, it's already corrected, trying to set up a pattern here that is likely to continue to climb along this upward line here. So I would give it about a 60% probability that we see that upward Fibonacci target. Okay, folks, that'll do it. Fairly quick stream tonight. Yeah, I think in summary, just real quick, and I'm doing this, I was hoping that we're going to have everything together for the upcoming conference, and it looks like it's going to be tomorrow. We ran into a couple snags today, and I actually had some of my time got hijacked earlier today. So anyway, we're still on for full announcement before the weekend. So as they say, come hell or high water, we'll probably start the meeting off tomorrow night with that. So anyway, thanks again for watching. Crazy markets. Summarize. We still look like we got some more downside, but looking for at least a slight bounce in most of the indexes on the equities. But anything can happen here, folks, because there's really no real support. As I was talking about, these are just what I call the market grid numbers are sometimes play out really good in this type of scenario where you have these big downtrends and you get PPM 1 and 2 both in downtrend mode. especially on the S&P and the NASDAQ, then anything's likely, and typically will hit at least some of those Fibonacci targets I talked about earlier. But thanks again, folks, for watching. Tomorrow's Thursday, the end of the week. It's hard to believe, so we'll try to summarize everything we can and set up the weekend. All right, folks, thanks again. Talk to you tomorrow night.